Are you 100% satisfied with your current property manager? Tired of chasing them for updates? Is making more money from your property investment important to you? With your Bonzo, you get one platform, one point of contact, and one low management fee. For greater ROI from your property investments, visit landlordroi.com.
Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
G'day, how you going? Welcome to the podcast. We're going to get right into it today and all things Brisbane. Some of the criticism I get on this show is that we don't concentrate enough on Brisbane and some of the other state capitals outside of Sydney and Melbourne. So it's my commitment to you that we're going to be making sure that we're covering the ground right across Australia during 2020, all the different property markets and what's happening. And if you've been tuning in recently, we've been doing quite a lot of stuff on the data. We've had some data specialists in from a number of the different data houses, including SQM and also CoreLogic, telling us about what's going on. And data can be a very important and valuable mechanism for property investors to make sure they're investing in the right spots. So go and tune into some of those episodes. I really enjoyed them. We did some deep dives into a lot of the different state-based markets in terms of the numbers. But today I want to mix some of that with the narrative, particularly around Brisbane. Joining me in the studio, they're back. Last time they were here was October 17th last year, when we did a piece and a podcast, 10 misconceptions on the Brisbane property market. Melinda and Scott, Jennison from Streamline Property Buyers. How you going, guys? Thanks for flying all the way down from sunny old Brizzy to sunny old Sydney.
Yeah, the rain's gone. It's good to be here again.
It is. And before we coming on air, you guys, you gained an hour on the way down. No, you lose an hour on the way down. You gain an hour on the way back. That's how it works with your daylight savings scenario. So how's, outside of you guys being an hour behind the rest of Australia, which is a metaphor in many ways because Queenslanders are well known for their being always the first and active and responsive. I'm not going to beat up Queenslanders this time around. But what's going on in Brisbane right now is last time we got together 4 months ago, the world's moved on, Australia's moved on, Queensland's moved on. It's getting a bit easier for people to secure financing. Investors have been looking to Brisbane for many, many years. Is it a good time to be up there, and what are you guys seeing?
Yeah, it's an interesting market, and what we are seeing on the ground is just record numbers of buyers, and that is not slowing down. I think it's had a further tick up in January from this year onwards compared to even last year. So I think that that's being accelerated by low stock supply at the moment. We're seeing that in both the sales and the rental space. We've got low vacancy rates, so a lot of interstate investors are attracted to our high yield. So there's a lot going on, and certainly a good time. There's plenty of upside potential for Brisbane looking into the future. So
is it out of whack or out of equilibrium at the moment in that there's way more investors than what there is properties for sale, or no one's putting their properties up for sale and the investor level is still consistent? What's your read?
I think buyers in general, not necessarily investors. I think there's been a big drive from owner-occupiers, and we're certainly seeing a lot of competition from those emotional buyers. And the buyer depth is phenomenal on some properties that we've certainly been putting forward offers on, and a lot of properties are going to multiple offers. So it is harder to secure good quality investment properties when you're competing with the emotional owner-occupier buyer.
Are people still sitting on their properties and not putting them up for sale? Or, you chat with real estate agents every day. Are they starting to see it easier to secure listings, or are they still scrambling?
We saw a slight tick up in listing volumes between December and January, but stock levels are still down about 6% from where they were 12 months ago. So there's certainly still supply issues from the sales perspective. Yeah, there's not a lot of buyers that are putting their properties up for sale, which is contributing to low supply. But, from a buyer perspective, there's a lot more demand than there is supply. So there's certainly an imbalance, which we're seeing is occurring in some pockets more than others, and certainly putting some good upward pressure on prices.
And what are you seeing, Scott, in terms of the supply and demand and how it's sort of influencing properties? Because the more buyers in the market and the less sellers in the market, there's obviously upwards pressure on prices. So therefore, prices go for a lot more than what might be assumed. I'm quite keen on the whole auction versus private treaty up there. But how are you keeping connected with these dynamics of the market supply and demand, Scott?
Yeah, look, I guess a lot of that also comes down with construction. So construction work's also down 24% on the decade average. That's obviously putting in limits of properties that are supplied, and that will continue on for a while because construction, as we know, takes 6-12 months for that to happen. So that will put a bit more pressure on it as well. As Melinda said, the numbers of buyers that are out there is just incredible at the moment. We've been to some auctions where recently there was 29 registered bidders at an auction, and in different types of properties, 40, 50 groups to an open home. where they go to multi-offer. The latest, just yesterday, we went to offer on a property and there was 13 offers put on the property after one open home.
That's pretty hard going, isn't it?
Yeah.
Yeah. So do you just, if you know there's that much level of activity, do you just not want to participate because you just know you're not going to get it? Like if there's that many people, what's the chance of getting it? Or you can always get the property, but you're going to overpay for it, right?
Well, that's an interesting question. And one thing I always get asked by potential clients is, can you buy me something under market value? But the reality is in Brisbane, when you've got that much buyer depth, market value is what someone's prepared to pay on the day and what someone's prepared to sell a property for. We are still appraising properties based on historical sales, so we're not artificially inflating to position our buyers at a higher price, but we're certainly helping to condition our buyers to understand that outside of our appraisal range, they're having to apply a stretch factor of 2, sometimes 3% on top of the highest end of the appraisal range, simply to secure properties because they are competing with the emotional owner-occupier. There certainly becomes a point where the numbers don't stack up from a feasibility perspective, from an investment point of view. But at the end of the day, if you're buying into a market where there is such high demand and the strength underlying the local Brisbane economy, we see that continuing in the future. So I don't see this slowing down anytime soon. So I guess if you sit on the sidelines for too long, there's going to be an opportunity cost of staying out of the market versus paying something, that is going to be fair market value in this competitive market. But looking back 15 or 20 years from now, which is a typical investor timeframe, and understanding that the additional stretch factor that needs to be applied to acquire the property now really doesn't matter in the long-term scheme of things.
How do you work it out? And Scott, I want to ask you about this what's driving demand for property, but this whole concept of a stretch factor of 2 to 3% on the property. So Melinda, is it a hot market in Brisbane or is it too hot? As in, if you're having to pay a premium, in inverted commas, to get into the property market in Brisbane because stock levels are so low and there's so many buyers in the market, are you better off going somewhere else in Australia? How do you work that out?
It's a good question. Outside of Brisbane, we're not really over the macro drivers of other economies outside of Brisbane. So we certainly focus on opportunities in Brisbane moving forward. An investor needs to understand ultimately what their long-term goals are. And if they're looking for, a relatively good yield as well as good long-term capital growth, Brisbane is more affordable. So it does provide, other options that some markets outside of Brisbane don't provide. It comes down to an individual investor's goals as to what, macro market they should be targeting, but there's certainly opportunities at many different price points within Brisbane for investors right now.
And we'll get into some of those specific markets in a moment. Scott, to touch on something you mentioned around construction being down, and you're going to start seeing the flow of the impact of that over time in a number of years, but there was a point in time when construction was just bonkers up in Brisbane and, sort of CBD or the inner rings. There was buildings going up everywhere. There was, in many ways, oversupply of apartments. How's that sort of supply and demand on the apartment side sitting right now? Is that starting to get absorbed, all that sort of apartment stock?
It is. You're still seeing a small amount of apartments, but there is still a fair high supply of apartments. It's not the space we tend to sort of work in ourselves. We have more house and land for our investors. And also back on, as you said previously, about do you go and buy somewhere else? I guess what we look at from a positive point of view is if you buy a property that is in demand, as opposed to one if there's not multi-offers on it or several people looking at it, is it a good investment? As opposed to one that has got a lot of offers on it and people that are at the open homes, there's a lot of demand. So it's obviously a good investment. Other people are interested in it as well.
So what's really shaping the demand then for property in Brizzy? So, we touched on this competitive force coming in of owner-occupiers, and whether they're first-time buyers or they're people looking to upsize or downsize or do whatever they want to do. But why is there so many people trying to buy property? And is this just the equilibrium of not enough properties available if that could absorb it in? Or is there more buyers there now than what there was 6 months ago, 12 months ago, 18 months ago? And what's behind all that?
Yeah, it's a good question. And I think that there's a lot of macro and micro drivers that are starting to really play here. We've obviously still got accelerating population growth in Brisbane or throughout Queensland. We're up about 2.3% on the decade average. So we're also the number one state for interstate migration. So more and more people are moving to the southeast corner from the southern states. Partly because it's affordable. There's a huge value gap between Brisbane and Sydney and Brisbane and Melbourne at the moment. And according to CoreLogic, it's the largest it has been for about 15 years between Brisbane and the southern states. So there's opportunity for buyers that otherwise can't afford to purchase into the other big capitals to come into another fast-growing region. We're also livable, livability in Brisbane. Typically people come for the lifestyle factors, the climate. Yes, we're very humid at times and that is not appealing for some, but, generally speaking, it's a nice, warm, sunny environment. From an economic perspective, we've had improving economic growth. We've got employment opportunities that are starting to improve as well. So when we look at some of those macro things that play on property markets, there's certainly momentum that is building in Brisbane. And previously, while some of these things have been developing and coming into play, we've had a supply issue, as you mentioned, and we've had too many apartments. And when you have an imbalance between supply and demand, if there's too much supply, that is aligned with the demand, you don't get price growth. Where you get price growth, it's a basic economic principle, is when you have an undersupply combined with increasing demand, and that just tips the balance. And I think we've got the perfect recipe for upside growth potential right now.
And a lot of investors have been investing in Brisbane for 5-6 years on the premise that there will be price growth at a point in time, which no one's really seen. And obviously the whole of Australia's gone through a bit of a downturn in the market over the last number of years. Brisbane's held reasonably steady, but what's the numbers telling you about this price growth for Brisbane? Because you're talking about this upwards pressure which should lift prices purely through demand. And I want to touch on some infrastructure stuff in a moment, but what are the top line numbers for Brizzy for 2020 and 2021?
Look, there's been some big research groups that have predicted big price growth in Brisbane, up to 21%. We've seen BIS Oxford Economics predict good future price growth over the next 3 years. We've seen QBE Housing Market Outlook reports predict something similar. SQM Research also showing good fundamentals for Brisbane, and the Domain Housing, the latest housing market report, also backs Brisbane for superior capital growth over the other capitals. I think from an investment perspective, the fundamentals are in place. We've seen 2.2% price growth according to CoreLogic data over the last quarter. However, CoreLogic data incorporates over 38,000 hectares of land throughout southeast Queensland, and that is what formulates the Brisbane data. So it's not going to be focusing specifically on certain areas. But what we're finding by being local experts is that there are pockets in Brisbane that are experiencing significant price growth. When we look at data, it is always retrospective. It's telling us what happened 30 and 60 days ago. Whereas by being on the ground and seeing what people are actually paying for properties, how much over the asking price they're actually, securing properties for, that's how we can determine which areas in Brisbane are really taking off versus those areas that, potentially are more flat.
And I had a chat with Louis Christopher, who heads up SQM Research, just the other day, and we spoke about Brizzy numbers. So you can go and listen to that podcast. It's wherever you listen to it right now. It's probably the one just under it. So go and tune in. Now, I want to chat about infrastructure, but we're going to go to a break beforehand. We'll see you in a second.
Creating financial freedom is every investor's dream. Best-selling author and director of Pure Property Investment, Paul Glossop, is giving you that chance. To grab a copy of his new book, A Surfer's Guide to Property Investing, absolutely free, simply jump onto Pure Property Investment's Facebook page, hit the message button and type the words Smart Property to secure your free copy today. But hurry, this offer is limited to the first 100 people.
Welcome back, everyone. Here with Melinda and Scott, Jennison, Streamline property buyers, having a chat about it's sort of out of kilter, the supply and demand ratio in Brisbane right now, and the fact that there is an immense buyer interest, which is seeing a lot of people turn up for the purchasing of property, putting a lot of upward pressure on prices, and whether or not Brisbane is actually the right place to be investing right now. We'll get into some of the micros, sort of suburbs and what these guys like, but there's a lot happening up in Brisbane that maybe a lot of people don't know about in terms of infrastructure. And I get up and down there quite a lot and always checking things out. And there's always some cranes in the sky and things going on. But there's some pretty significant work going on up there right now, isn't there, Scott? Yeah,
there's a lot of things happening and also planned. Just a list of a few things that I've brought down here is the Queen's Wharf project, $3.6 billion project. It's currently under construction, opening in 2022. About 2,000 jobs during construction, about 8,000 once it's operational. Cross River Rail project, $5.4 billion for that project as well. Underground stations connecting Woolloongabba with the CBD. The second runway at the airport, which is
long overdue,
due to be completed mid-2020, $1.3 billion on that one. Brisbane Metro, again, a bit more transport infrastructure for us. And Brisbane Live, $2.1 billion construction. Brisbane Central Park, which is in the area where the Victoria Golf Course area is at the moment. Howard Smith Wharf, Wharfs, which is also, it's been opened already. It's recreational lifestyle, fantastic place. So if you're ever in town, worth a visit down there. Brisbane Waterfront, Eagle Street Pier to be redeveloped. And there's also 4 river crossings, new river crossings proposed.
4 river crossings?
Yeah.
Like road or pedestrian or both?
Pedestrian. Yeah,
okay.
but they're going to link some suburbs that have never previously been linked. So, it's going to open up new opportunities for homeowners and investors to experience, lifestyle precincts that would otherwise not be available to them.
So this is planned and approved, or they're still going through?
Most of this is planned. There's a couple of projects that are still not approved and funded, like Brisbane Live, and the 4 new river crossings, only one of those is actually approved and funded at the moment. So there's certainly a lot that is already underway. They're calling it a once-in-a-generation infrastructure boom, and it's certainly the greatest spending that we've had in Brisbane since the 2011 floods that obviously, really put a downer on our property markets and investor confidence.
Hard. Yeah, absolutely. And we can touch on that also because it's still something to be considerate of when you are investing up in Brisbane. Just because something's cheap doesn't mean it's good, right? So a lot of people, I think, straight after the floods thought, it's once in a 100-year flood, so I might as well invest there now because it's not going to flood again in 100 years. But, it does decrease in value. Who's paying for all this infrastructure stuff? I hope it's not us people here in New South Wales coughing up our federal taxpayers' dollars to make it more livable up in Brizzy.
It's a combination of federal, state, local and private funding. So it's coming from all sources. And I guess the economic benefit to the Southeast region as a whole will be huge. I think all of these projects are due to be completed by 2025. So we're looking at between now and the next 5 years, a massive transformation.
Huge amount of work.
And, particularly the infrastructure of the new rail network, of Cross River Rail and the, metro network, it's going to deliver new ways for people to utilise public transport into and out of the CBD, and it's going to open up new transport corridors and provide public transport options for some suburbs that currently are not actually easily accessible to other public transport options. So it is game-changing for some regions, yeah.
And what's the sentiment of Queenslanders, people that live in Brisbane, and also interstate investors who are looking at around the political climate, the political leadership up there from a state and also from a local council level? Is everyone, to get that many projects through means that someone's actually sort of dragging, kicking, screaming and pulling this stuff along, right? And knocking on the doors of Canberra to make sure there's money come up. And I know a lot of super funds are probably also coughing up dollars into this as well. What's your views of the political leadership up there?
I'm not going to give my personal views, but, I think that there is a lot of debate over, how our state is being governed. There's pros and cons, obviously, with every political party, so I'd prefer not to provide my personal opinion.
No, we don't get political on this. We try not to.
But I guess it's all about ensuring that we're really delivering an economy or good economic growth that's going to produce jobs. And I think, if a government, regardless of who they are, can provide the structure and the, framework to enable that to occur, then that's the sort of government that we want to lead our state.
And Scott, what are you seeing? Like, we're talking about this major infrastructure programs underway, and the idea is that when infrastructure goes in, typically what happens is people follow and therefore places become more livable and therefore property prices go up, right? But, a lot of this is centred around the Brizzy area or transition in and out of Brisbane. Are the outer rings going to get much money? Are you going to see much change? And is that going to shape property markets, or what are you seeing?
Yeah, look, I think because, as we've touched on, Brisbane still being so livable, we can still travel around Brisbane quite easily at the moment. With, as Melinda said, with the transport corridors to move around, it does make it a lot easier as well. So I think the outer suburbs will still benefit from that side of things. And I think also the employment and obviously the affordability of those houses, I think it's still a very positive thing.
So if you just get a dart and chuck it into a map in Brisbane as an interstate investor, are all markets created equal? Melinda, give us the inside run on where you should be spending your bucks right now to try and create some more competition for you, obviously. But, where should you be going?
I think you and I both know throwing a dart at the map is never a good investment strategy, and there's always markets within markets. But what we're typically saying, historically, distance from the CBD has certainly determined the capital growth potential in Brisbane. Now, Brisbane is not a radial city. We're very much a northern corridor and a southwest and a southeastern corridor. I believe looking forward into the future, distance from the CBD may not be as critical, but accessibility to employment hubs will become the more critical factor. I've mentioned previously that commute times in Brisbane by car have doubled in the last 10 years, and I see moving forward in the future that's only going to get worse. So as our roads become more congested, people will see more value in those public transport corridors. And, if you're living close to the CBD but not on a public transport corridor, that may be a frustrating situation. Whether that will convert into lower price growth, time will tell, but certainly accessibility to CBD and other employment hubs is, in my opinion, going to be one of the key growth drivers for Brisbane moving forward.
So we're going to go to a quick break, and when we come back, Melinda's actually going to give us some suburbs to invest in. Back in a moment.
Are low interest rates impacting on your investment returns? It's time to rethink. Rethink Investing creates wealth for clients through the strategic purchase of positively geared, high cash flow commercial property. Industrial properties, retail assets, or office spaces can be a smart investment option that produces significant and long-term return on investment. Rethink your investment options and look to commercial property. Learn more at rethinkinvesting.com.au. Rethink Investing, Australia's #1 commercial buyers agency.
Welcome back, everyone, here with Melinda and Scott, Jennison. I liked your response before we went to the break, but you didn't give me one suburb to invest in. I know our audience is sitting there going, what's going on? That all sounds really good. That's really cool. Yes, I get all that. Where do I go? Come on, give us something.
I love the way you interrogate
I
us.
think you book a consultation.
Oh, maybe. That's the way it works, right? I don't expect you to give away all your inside secrets, but, you said you've given me essentially the North Corridor and, come on. And I know getting around Brisbane's hard work, in a car.
In all honesty, we personally are not recommending locations in the many parts of Greater Brisbane. So Brisbane as a shire is quite a large geographical area. We've got the Moreton Shire to the north, the Ipswich Shire to the west, we've got the Logan Shire to the south, and we've got the Redlands to the east. Personally, our company's not investing or not recommending investment locations through Redlands, through Logan or through Ipswich. Reason being that about 75% of Queensland's or southeast Queensland's future land supply will be coming through those corridors, as well as the northern parts of the Gold Coast Shire. That potentially puts future supply risk for an investor on the table. And as we know, when there is supply that is keeping up with demand, that can cause some price suppression. So there's some corridors through the Moreton Shire, certainly the lower suburbs throughout the Moreton Shire, not the most northern areas. But generally speaking, in the Brisbane City Shire, anything that is on a train line, anything that is on the proposed metro line, particularly suburbs that are going to benefit from the infrastructure coming with the Cross River Rail, you're not really going to go wrong with a lot of those locations, providing you're buying a flood-free property and providing you're doing your due diligence to ensure that the location you're selecting is not going to be negatively impacted by future supply that's going to come through higher density development in those locations as well.
Okay, that's a pretty reasonable response. You didn't give it actually any suburbs, but your rationale for it was pretty good. And when you look at these new transport links coming through, and whether it's rail lines, etc., what's the sort of whole attitude towards rezoning across some of these we're talking this sort of northern area, right? Is that the sort of investment assets you should be looking at, stuff that does have the upside benefit for a rezone?
Look, buying on speculation is never a good investment strategy. So the last Brisbane City Council town planning scheme update, I think, was 2014. And since then, obviously a lot of land was rezoned at that time. It's unlikely to see any potential rezoning anytime in the near future, given that was in recent times. I guess, anything that has future development potential, you have more value in the land per square metre. So whilst it may still be the same entry price right now to buy a house versus something for development, in the future a developer will always pay a premium for the increased density on a site. In Moreton Bay, the most recent town planning scheme was updated about 3 years ago now, so there's been more recent rezoning there. That's only just catching up with some investors in terms of what the value of the land is in that location. But as always, it's understanding not just what the land is zoned. If you're looking at something that has future development potential, it's also got to be a developable site. So it's not just about the land zoning, it's about accessing sewer, stormwater, water connection, making sure the contours are not going to create a development that's not feasible. So there's a lot more that goes into selecting a site that has development potential than land zoning alone.
And I know, Scott, that's a lot of the work that you do within this business is with your building background and you're actually understanding the dynamics of every individual property and whether or not it's investable. Sort of top line though, what are the sort of 2 or 3 things we're sort of given a bit of a sense for the location you'll be investing in? And I think there's an upside benefit if there is this rezoning potential. But to your point, it's quite a lot of that's happened. So it's been identified. A lot of that's been capitalised right now. What do you need? What are you looking for? Just good bare bones properties? Is that the sort of the meat and potatoes type of strategy, or are you always looking for something with a bit of an X factor to it?
Yeah, look, it depends on the investor's appetite for risk, and it depends on what their goals are. So some investors, particularly in the current lending environment, have a requirement for a certain rental yield. So that will limit the locations that we're able to select for them, because some suburbs will deliver a better yield than others typically. It's certainly property dependent when it comes to looking at yield. From the perspective of, adding value, there's a lot of opportunity in Brisbane for the renovation strategy. That's something that, we certainly help a lot of investors with, identifying a property that has the potential or has good price disparity between entry and exit point within the suburb. And so they can add some value. And we're certainly helping some clients through both structural and cosmetic renovations to do that. Development opportunity is huge, although it's becoming a really tight market to secure some of these typical splitter blocks or 1 into 2 subdivision sites. I think it's one of the hottest types of properties in Brisbane at the moment, and people are paying a premium. So yes, you can still acquire those sites, but they're not feasible to develop them instantly based on the prices required to secure them. But it's a great land bank, long-term opportunity. Buy now, hold. The yield is not as good on those opportunities, but if you've got a long-term investment time frame and capital growth is your primary priority and you're wanting to manufacture additional equity, development is the way to go. So depending on the investor in terms of, what strategy will suit.
And Scott, are you happy sort of in a high-vis top on site doing what you do, work on this sort of stuff, or behind a microphone doing a podcast? What do you reckon?
I think probably on the sites.
On site. What is it, if you had to give our listeners a couple of tips for really understanding the renovation potential for a particular property? Imagine you're one of those guys that you would walk into a place and you'd know pretty quickly, and you do it without thinking about it, whether or not it's a good property or not. But what would be those key things that you look at?
Just as long as the layout, the location, and obviously if it's got good bones, anything can be changed in a house. It obviously depends how deep your pockets are sometimes. But just making sure that it's got a decent layout, which way the property faces sometimes is critical. A lot of people don't like to face east-west because you get that afternoon sun. So north-south, good layouts, and something that can be changed around a little bit without major construction and structural issues.
So you can sort of transform a property without having all the expense with it. So if you can add a room, you add a room, if you all that sort of stuff.
Yeah, change a 3-bedroom, 1-bath into a 4-bedroom, 2-bath. Things like that, converting garages under existing footprints. There's some things that we've helped some clients with in the past as well.
It's cool. And from what I understand, the great city of Brisbane's bidding for the 2032 Olympic Games. And to think it sounds so long away, right? But it's like 12 years or so. What do you reckon about all this, Scott? You reckon you guys are going to win it, number one? And number two, if you do, what will that mean? And I don't want people to speculate on Brisbane winning the Olympic Games, but you often find, like for Sydney, it breathed a whole bunch of life into Sydney. It changed the way in which we eat and the way we socialise and stuff, which has now been back to where it should be. We've got rid of those stupid lockout laws. But is this something you think it's even worth coming onto the radar? Should you be worrying about this sort of stuff, Scott?
It'll motivate our boys to train more, to try and make
there
it.
You go.
So that's a positive.
Is that what you want, an Olympian?
But yeah, it'll be a game changer.
Yeah.
I think we're very positive about it and think it'll be fantastic for the area.
Who's Brizzy against to win it?
Good question.
Yeah, I don't know.
Don't know. Yeah.
Give it to Brisbane.
I think based on their feasibility modelling, they were looking at about $7.4 billion in economic benefits to the local community. So, without a doubt, that's going to drive, a lot of value, I guess, into Brisbane. But it is speculation. It's not confirmed. It's just at bid stage at this point in time. But I certainly think that it would bring many benefits if it did come off.
Well, it sounds like all these infrastructure projects, particularly like the wharf developments and pedestrian access points and new train lines, all that seems pretty connected in with a nice big bid for the Olympic Games. But it'd be great if Brisbane got that. It'd be brilliant. Give us an update, Melinda, on the Sunshine Coast University campus. What's going on up there? Because I've got a lot of property around it that I'm waiting to go up in value as a result of this. So
construction's finished, the staff are there, and as I understand it, it's opening this month. So first intake of students is happening as we speak, and that's not just what is planned for that area. It is a priority development area, and there are further plans in place to develop a whole health precinct, some more medium density unit development to the southern areas of the campus area. So a lot is going on. I think that area will very quickly gentrify. A lot of the land that is very close to the university that is zoned for higher density development, I think we'll start to see some student accommodation moving into that space. So a lot of activity in that area. very well located properties are going to multiple offer frequently. The best way to secure properties without competition is off market, and even that's becoming more competitive at the moment.
So we, Smart Property Investment, bought a block of units, five or six, I can't remember, units in Launton there about sort of 3 years ago on the basis of realising the upside value, and it's all zoned well, right? It's already 2 or 3 stories high or whatever or something like that. So you're very keen on what happens up there. Is it a big deal up there in Brizzy? Like, are people sort of aware of the level of infrastructure that's happening in the state, whether it's like Sunshine Coast University or all this other stuff? You know, do the locals know what's happening?
That's a really good question, because I think that, you know, we're very across it because this is our industry and it's part of our role to make people aware of that. But I think that the average person typically wouldn't have the level of detail that we have. They sort of know things are going on, but they don't really know where, you know, what stage things are up to or what impact it may have for the local economy or how it may impact on, you know, demand for property. So, you know, a lot of people would not even be aware that there's a university about to open at Peachtree, for example. So we just live our own lives up in Brisbane, and unless there's big news in the Courier Mail, then people generally probably are not aware.
Well, if you don't know, you don't know. And if you're investing in property and spending hundreds of thousands of dollars, you probably want to be pretty informed on this sort of stuff. So I'd like to think people that tune into this podcast are into that. But thanks, guys, coming in and have a chat about Brisbane again. I like talking about Brisbane. It's great. Great spot, and you have to keep us engaged and connected. Do you have any sort of major concerns about your ability to secure property at the right price, considering this sort of going back to this buyer demand? You know, what needs to happen, do you think, for more properties to come onto the market in order to maybe take some of the heat out of that buyer demand that you've got right now?
Yeah, it's another good question. I think that we're going to start to see some more supply once. I think that a lot of it dried up because developers simply couldn't get funds. So, you know, there's certainly a lot of apartments in the approval phase. So there's a lot of approved development, but it's not yet started construction. So I'm sure and I'm confident there will be another wave coming through. It's understanding where they're going to be built and how that may impact on properties in the immediate area. And that's obviously what, you know, where we research consistently to ensure that we're keeping on top of it to make sure that we're warning potential buyers about oversupply issues in the future, because, you know, without a doubt, if it's already approved at some stage in the future, it may be built, and it's just a case of getting funding to make sure that it, you know, continues.
So you reckon be wary of that sort of house and land type packages out in the sort of the fringes where there's a lot of greenfield sites? You wouldn't be touching that?
Look, we certainly stay very clear of that. In fact, I was contacted by a potential client a couple of weeks ago, and he was disappointed to see that a brand new property that he'd purchased only a couple of years ago has actually gone down in value when he's just recently had it revalued. So that's not unusual. Generally, we find that the land appreciates at a slower rate than the building depreciates. So brand new does bring a lot of depreciation benefits, but if it's in an area where there's a lot of new supply coming to the market, the developer really is in control of the stages of the development and the land releases. So stage 1 is the brand new estate, but as soon as stage 2 opens, stage 1 properties become second hand. And as an investor, they're worth less because the second-time buyer has no benefit of the depreciation benefits associated with fixtures and fittings. So, you know, you can see the roll-on effect from there. And effectively, if the developer has 10 stages in a development, it can be high risk for an investor that moves in the early stages of that sort of.
And you're still seeing that now with Springfield. So which is the biggest master plan community I think ever planned for Brisbane. And first when we come in, it was really good. It was really good until budget changes means that you couldn't depreciate second-hand properties, right?
Correct.
That's all out of the window now. Is that pretty much all done now in Springfield, or is it they're still releasing stuff out there?
Springfield is just growing every day.
Growing.
I mean, they had the luck, I guess, of getting a train out there. They're trying to secure the Brisbane Lions, you know, home base and things out there. So they're doing a lot to try and generate business and industry out there. I guess the only concern that we have for that area is that Springfield as a location is almost a city in itself, or a large area in itself. But all around Springfield is greenfield land. So, you know, how far out can Springfield grow? Well, the land goes forever. So it's certainly part of the, you know, areas that I mentioned before, you know, where most of Southeast Queensland's future land supply will be coming, and it is down in that growth corridor.
Yeah. Supply and demand, just be careful where you buy is what you're saying, right?
Absolutely.
You know, and I'll speak to the experts if you need some help.
For sure.
That's really good. Thanks for coming in, guys. Let's get you back again at some point soon. I think we've got one scheduled. There's one in my calendar, so we'll work up what we want to have a chat about. And if any questions at all you want us to cover around Brisbane, probably the right time to do it is when Melinda and Scott Jennison from Streamline Property Buyers are in the studio. So get in touch with us, and you guys will be happy to do a bit of a Q&A of anything specific.
Absolutely.
Yeah, that sounds a really good plan. Let's get that and make sure that happens. You can email the team, editor@smartpropertyinvestment.com.au. Send them through. Just put in the subject field, Melinda and Scott Jennison, so we know that's going to be related towards Brizzy, and we'll get them answered on air so we can see what's going on. I've got a lot of questions myself that I want to cover, some specifics around the markets as well. By the time you get back in, we'll probably have another quarter at least of property data. So you're going to start seeing these trends and seeing whether or not we can extrapolate some of those dynamics out. So, but thanks for jumping on a plane and coming down to see us. Really do appreciate it.
Thanks for having us again.
Nice one. Remember to check out smartpropertyinvestment.com.au. If you're not yet subscribing to our daily morning newsletter, so you're the first to know what's going on in property investment right across Australia, it's smartpropertyinvestment.com.au/subscribe. Social media, just Smart Property HQ. It's on all the different channels. Go and check us out. Like us, follow us. You can send a direct message through there if that's how you want to communicate with us, whether it's for Melinda and Scott or whether it's for us to answer. Just send a direct message and we'll make sure we get that sorted out. Please, one quick favour, and a lot of you have been doing this recently, please keep those reviews coming wherever you listen to this podcast, whether it's iTunes or on the site. And remember, if you want to send us a question, you can just press that big purple button that says record now, and you can actually send an audio question. We'll get that played on air and answered. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.
At Passionate Property Investors, we hear from a lot of infinite learners who love to know more and share more about their property knowledge and investment journey. If this sounds like you and you want to get more education where your eyeballs are, then join us on Facebook at Passionate Property Investors. Videos, ebooks, and learning pathways to get your property cup filled up. Not to mention free education with a tribe who gets it. Join today by searching Passionate Property Investors on Facebook.